The market is now open and it is already soaring to new all-time highs, and next week we are going to understand how the semiconductor industry is moving on. We have some very big names, ASML reporting before market open on Wednesday, as well as Taiwan Semiconductor reporting before the open on Thursday. Now this is all interesting as today we're focusing on AMD Advanced Micro Devices. What is the price that we believe this will hit over the next few years? Is it undervalued, and is this one we should really consider strongly for our portfolio? Well, first off, we see that Seeking Alpha and Wall Street give this a buy. In fact, 4.41 out of 5 is very strong. Around 4.5 is where this would turn to a strong buy, and we already can see Quant giving it that typical hold. Now, right now, it is trading in the midpoint of the 52-week range. It has come quite some way away from its 52-week high at $227, and the forward P, which we will discuss later on, is sitting right now around 50. Now look, year to date, it has underperformed the S&P. It is up, although 14%. Over the last 12 months, a lot better at around 55%. And if this was one you had over the last 10 years, well, you would be a very happy person, up more than 6,147%. Now, when we talk about this company in terms of their earnings, well, just take a look at their next 4 quarters. They're anticipating massive double-digit growth to the EPS on a year-on-year basis. And one thing we love to see is historically over the last 4 quarters, they have a 100% track record, either being in line or outperforming management expectation. We also can see here massive growth expected into December 2025 on the EPS, which will significantly lower that forward PE down to around 31.12. We can also see from their latest AI event that they talked about releasing the latest high performance computing solutions, which they do believe will define this new AI era that we are entering, and they also said that this would essentially be shipping at the end of the current quarter. So hopefully over the next few quarters we can in fact see this product into the numbers, and as we would expect, alongside their earnings per share to really accelerate. On top of that, they've also talked about how they believe the TAM, the total addressable market, to be larger than what they first thought. Now they see it around 500 billion in 2028. Earlier this was around 400 million, but we always like to take a look at external sources, and Bloomberg, who have been historically very bullish on the AI industry as a whole, believe that we will see a compounded annual growth rate that is a year-on-year increase of around 42% over the next 10 years. And remember this because we will come back to this later on in the episode. Now, before we jump into anything else, we want to just run through some key highlights from their latest quarterly presentation, which was the back end of July this year. They did show growth when we looked at revenue in terms of the growth from the same quarter last year, although it is fairly minimal from 5.4 billion, as we can see that 9% year-on-year increase to 5.8 billion. Maybe we've just been spoiled with some very high quality companies like Nvidia, where we've seen double-digit growth. Nonetheless, moving forwards, they are expecting this growth to really accelerate. And we also love to see on this channel margin expansions, whether that's gross margin or operating margin, and we get that both on a GAAP perspective as well as a non-GAAP. Remember, high quality companies will always increase both their top line revenue as well as their margins. This is something we can clearly see AMD are doing through the numbers. And we also note their operating income does look solid from a year-on-year perspective. In fact, on a GAAP basis, they were at a net loss in 2023 quarter 2 from the same quarter this year, profitable, and a nice increase to be shown on a non-GAAP basis. We then move on to the EPS. Again, very good growth both in terms of a GAAP and non-GAAP, and as we just saw earlier, they are anticipating massive double-digit growth moving forwards. And we can in fact see, in terms of a summary, for those that want to see a bit more detail, their revenue on a year-on-year basis up 9%, their gross profit up double digits, we see gross margin expansion, and we can also see the same there for the operating side as well, with both their net income as well as their EPS up triple digits. So they are doing a lot of things right. This is what we love to see, increases right across the board, and moving forwards they expect that to continue. In fact, they're actually expecting large growth from the previous quarter to 6.7 billion. Gross margins looking very strong. We'll touch upon this as well in comparison to the sector overall. So looking good for essentially AMD. And in terms of the actual metrics, let's get to it. Free cash flow, as always, consistent increases over the long term. We get a lot of inconsistency, especially over the more recent years as well, in fact decreasing from 2021, but we also have to understand that this industry, the semiconductor, is very cyclical as a whole. Nice to report though, over the next 12 months, they are anticipating large growth to the free cash flow overall. In terms of inconsistency, again shown through the sales growth on a year-by-year basis, we do note it has gone through periods of very large growth at double digits to the top line. 2023 though, the more recent annual report, there was a decrease, and based on the trailing 12 month, we can see it back up to 6%. Now we also understand from their latest AI event, they are anticipating not just the EPS that we saw, but also their top line sales to really drive forwards, especially with the help of the data revenue that has been a large increasing factor. From a numerical perspective as well, around 5 billion, so in fact quadrupled over the last 10 years to 23 in 2023. Although we do have to point out that they have diluted your position as a shareholder over the last 10 years, remember you wouldn't care one bit, as we saw the share price return has been phenomenal over the period, but something we do want to flag regardless. Then in terms of the ROIC, what we notice here, again, a lot of inconsistency with these numbers. We can in fact see the last 2 years have been very low. Remember, we want to see at least 10% to give us faith management are able to effectively allocate their capital. So a little bit disappointing not to see that there. Operating margin, again, inconsistency right across the numbers, low digits in 22-23 and noted on a trailing 12-month basis. So again, something to keep an eye on. Ideally, we want to see around 16%. Free cash flow margin, again, looking very inconsistent, although the last 5 years, as we can see here, have been at least around the 5% minimum that we do want to see overall. Now turning this a little bit more positive, what we do like to see on the net debt to EBITDA metric is 0, which we do get pretty much the last 5 years and anticipated over the next 12 months. This indicates to us, as it is the number of years it would take them to pay off all of their debt net of cash on hand, it won't even take them 1 day. So they do have a very, very strong balance sheet, and something we will show in a little bit more detail. Now we also want to flag, we've released our latest free weekly article. We drop one every single Monday morning to your inbox, where we talk about what's happened in the market over the last few days, as well as undervalued stocks that we do believe deserve your attention. So do click on the pinned comment below where you can sign up and read straight away. On top of that, you'll be able to gain access to 36 undervalued dividend stocks for the month of October, where we run through each one, also talk about the upside anticipated from Wall Street, and flag those that sit within our own portfolio. And for this month, you will be able to grab a copy of 22 undervalued dividend stocks that Wall Street themselves believe have the most upside over the next 12 months. So do click on the pinned comment below, sign up, and you can read straight away. Other parts of our analysis include insider movement, ownership around 0.73%, and we do notice around 78 million worth of selling over the last year, although in the more recent quarter we see no movement. Q3 around 3 million worth of sales, Q2 around 5.24, and for transparency, whilst we will show you, we don't really believe this has any bearish indication on the company. In fact, the most recent sale was on the 15th of July by the EVP for around 16,000 shares, as we can see netted him around $3 million. Remember though, personal financial reasons for why they sell, we don't really know why, and that is why we don't focus on this. We want to see buying, which is a bullish indicator, as management typically buy because they believe the share price will go up. Now in terms of an institutional perspective, 71% ownership, 10 billion worth of sales over the last year, 17 billion worth of buys, so they've been buying a lot more over the last year. And we also note in the more recent quarter of Q3 24, 126 million buys versus 86 million sales. So institutions over the last year and the more recent quarter are very bullish on AMD, as they have been buying more than selling. But as always, do your own due diligence and never copy their buys or sell trades. Now let's get into their income statement. We've already flagged their top line revenue, which as we've seen has grown very strong. In fact, we already indicated a 4 times growth over the last 10 years. But we want to flag their bottom line, their net income, the story that tells us. And in fact, it is very, very inconsistent. I mean, look at in 2020, it was positive by quite some amount. 2021, it increased before decreasing over the subsequent 2 quarters, which isn't something we like to see. This company has, as we saw, quadrupled their top line, yet their bottom line is very inconsistent. In fact, there has been a number of years where they made a loss, and we also note it is very inconsistent during the profitable years. So again, something to consider, maybe factor into our margin of safety later on in the episode. Now, in terms of the balance sheet, total cash versus total debt, as we can clearly see, cash has been increasing over the longer term, similar to the top line revenue trend, going from around 1 billion in 2014 to 5.3 in their latest quarter. Now, in isolation, remember that number doesn't tell us anything, so when we compare it to their total debt numerically and directionally, whilst it looks very inconsistent over the last 10 years, it hasn't really moved from a numerical format, 2.2 billion in 2014, 2.2 billion in the latest quarter. So again, we can see why the net debt to EBITDA metric looks very strong. It won't take this company, as we mentioned, one day to pay off all of their debt net of cash on hand. Now let's get to some of their gradings. The first one, valuation, where they get an F. Now we notice the P on a non-GAAP basis of 50 is significantly higher than the sector of 24, which means right now you're buying this company, you are paying a 103% premium. And this is pretty much consistent with whichever valuation metric you use. Question is it worth the premium? Second question is, how much of a premium is this worth? And we'll get to that in our valuation. Now, in terms of growth, nice to see a strong score of A. Year on year, 6.4%. C+, no surprises, only marginally higher than the sector of 3%. Moving forwards, around 12%, a little bit better than the sector of 6%. But we do love this metric here, the earnings per share over the next 3 to 5 years. They're anticipating growth of 41%, which is significantly better than the sector overall at 15%. We then move on to the profitability, where they get a B+. Gross profit margin pretty much in line with the sector, around 51 and 50. We then see their bottom line not too far off, a little bit better, 6% versus 4%. But one thing we do flag here, which looks very strong for AMD, cash from operations over the last 12 months, 1.92 billion versus the sector median of 96.5. Now, a quick recap for this part of the analysis: a double buy from Seeking Alpha and Wall Street, a hold from Quant, F on valuation, A on growth, with a B+ on profitability. Now, before we jump into the valuation, let's see how this company compares against other semiconductors, massive names, Qualcomm, Texas Instruments, as well as a few known well others. Now, total return, AMD is up 54%. Pretty much that is one of the lower performers. That shows us the industry as a whole has performed very, very strongly over the last year. When we look at over the last 5 years, AMD has been the best performing, up 447%. But we also note, again, semiconductors looking very strong and healthy. Over the last 10 years, no company comes anywhere near more than 6,000% return. But do remember one thing, that the past performance is not an indicator of how they'll perform in the future. So yes, they performed very, very well. Can they repeat that? Well, that is a question we need to consider. Finally, we just want to highlight their performance against the S&P. Over the last 12 months, clearly AMD has outperformed, and we get to the same conclusion when we look over the last 5 and the last 10 years. Again, can it outperform continually over the next 5, 10, 15, 20 years, whatever your investment horizon is? Something to consider, because there's always the option of investing in a low-cost ETF that pretty much tracks the S&P. Now let's jump into the valuation model. As always, if you do enjoy the content, values being provided, smash that like button, hit that subscribe and bell button so you are continually notified of these videos as they drop. Now, our intrinsic value is based on the DCF model of $189, and how we got to this price, well, we have the free cash flow movement here year on year. Average growth fairly skewed, as we can see, going from negative to positive over the last few years. And we have a 30% growth rate. We have a low, medium and high here. Today's episode of 30% with the discount rate at 8% gives us the present value of future free cash flows and terminal value. We add together with the cash, subtract total debt, get to the equity value, divide by the shares outstanding, and as we can see, 189 indicating 13% upside. Now, these numbers are subjective, and you can grab a copy of this model by clicking on the pinned comment below, running through your own numbers, whether it's for AMD or any others that you do desire. But just to show you for full transparency, at 25%, this would give an intrinsic value of $142, giving it downside of 15%. For those that are super bullish or believe it should be higher, at 35%, an intrinsic value of $251. As we can see, 50% upside. And for those that believe actually it is more in line with Bloomberg, over the next 10 years, the AI revolution, it is anticipated to grow. Well, at that 42%, will again just show you $366, which means this company is going to be more than double at 119% upside. But again, that does depend how this company does moving forwards. As we already saw, they are anticipating a very, very strong growth in terms of the EPS year on year, just over the next 4 quarters at double digit. If they can continue and keep this up, it may get even bigger. And as we already saw, they did revise their total addressable market. So let's take through anyway the medium rate at 30%. And we always on this channel like to do a margin of safety at 10%, where we execute on this if it meets the 3 criteria: wide moat, strong financial metrics, good forward-looking data. If you believe that, we'll buy up to $170. Then we keep going till it's near the current trading price, and it's not there yet at the 161, so sitting somewhere between 10 to 15% MOS in today's episode. And for those that believe even 15% isn't sufficient for them to consider AMD, we'll at 20% a buy at 152, at 25% at 142, and at the 30% level 133. As we said though, 10 to 15% MOS in today's episode, and we also noticed that Wall Street do give this 20% upside, their price target of $200 over the next 12 months. As always, give us your thoughts below. Is AMD one you've bought, maybe you're considering to buy, or maybe for you it isn't the right one in the semiconductor industry? Or in fact, there are a lot of people who do like to look elsewhere. For example, an ETF that does give them exposure right across the market, whether that is SMH, SOX, SOXQ. Again, lots of options to consider. As always, if you enjoyed today's episode, smash that like button, hit that subscribe and bell button so you are continually notified of these videos as they drop. Don't forget to sign up to the free weekly newsletter below, and come and join us in the Patreon where we do talk about our weekly buys and sells. As always, have a great day, and we'll see you all on the next one.